Hello, everyone. Welcome to our episode, Trader Tax 101. Tonight, I have an amazing guest for you. I'm Abby, the relationship accountant. What do? I help business owners and retail traders maximize their tax saving. Tonight, we have a great show. All right, everyone, welcome to our episode of Trader Tax 101. I'm your host, Abby, the relationship accountant. Welcome to our room. Tonight, I have an amazing guest. Listen, the market is killing a lot of us, and a lot of us are trying to wonder, okay, how does fourth quarter end? How does first quarter looks like? What is this market structure? Everyone's trying to put their thesis together. Well, tonight we're going to discuss what those theses are. How does fourth quarter looks like in the stock market? CPI numbers are coming tomorrow. What is everybody's waiting for? What is our favorite person Powell is going to do in December? Well, I have an amazing host tonight for you, and let's bring him in. Hello there. Hi, Zay.
What's going on, Abby? How you doing?
I'm doing good. I'm doing good. How's the family? How's everybody doing?
Family's great. Family's great. We closing in. We got a month. We are actually about a month
Ooh,
away from baby number two.
I
Um,
know.
yeah, having another little girl.
His baby
So
is due in
yeah,
December.
yeah, yeah, yeah. Family's good. Yeah, yeah. Everything's good. Everything's good.
That's good to hear. My social media manager, her baby is due next month too, on my birthday. So when's baby due in December?
The 15th.
Oh, all these Sagittarius. Hey,
Mhm.
December babies are the happiest babies. There's
Well, I
something
mean, we
about
got we
December
got
babies.
one so far, so you right about that.
She's hype, isn't she?
Yeah, she's great. She's great. Yeah,
So let's get to it. All right.
get to it.
Everybody's having their opinion about, this market structure, fourth quarter, Powell, CPI coming tomorrow. So I wanted to kind of like bring someone in that can actually, explain to us how one to put a thesis together, right? Because it's so big to actually have a trading plan. Two, how do those numbers look like? How they can affect us? And I was the first person, I'll admit, to say, in the beginning of the year that we were not in a recession. I saw consumer spending was still high, so I was like, listen, as long we are spending, as long we have the money to spend, there's no recession. And no one was really laying anyone off. So I was literally comparing 2008 till now, where we're in a different type of recession and we're
We
kind of
are.
like in a different type of market structure.
We are.
So I wanted to let's actually jump into the biggest topic that everybody's talking about, CPI tomorrow. What's your input?
Uh, really, my input is I look at everything from the market is just probabilities, right? So,
Yes.
give me a second, real quick. I just want to be accurate for the folks. So, what I'm going to do is get the estimates for
There you go.
tomorrow. So, um, give me one second. Give me one second. Give me one
You're
second.
good.
All right. Okay. So tomorrow, CPI. Where we at? Where we at? Where we at? Where we at? Okay. Pulling it up. Pulling up. Pulling up. So it looks like the range for year over year is 7.8 to 8.1.
Mm,
Um, and I think I've seen somewhere where somebody said the estimate was like 7.9. So
okay.
my thoughts are this: if we get anything under an 8 handle, so we do get a 7.9, 7.8. Um, I guess from a market perspective, I think that the market might take that good,
Okay.
because it'll be like a good decline, right?
Okay.
But we'll still have to dig into the core, right? So the core is projected to be zero point 0.5 to 0.8, right? Or no, I'm sorry. Yeah, no, core without food and energy. I'm sorry, 6.5 to 6.7. So
Okay.
that's another thing that we got to continue to watch, because the core is like the shelter,
Mm,
um, accessories, all of those kind of other categories that's not food
mhm.
and utilities and stuff. So we want to see that stuff start to taper off and come down.
Okay.
So If it comes under expectations, I think it could be good. If it comes in hotter,
Okay.
then I think the chances of Powell having to do a 0.5 for December go up. And the market probably ain't gonna like that.
It's not gonna like
So it's
that.
pretty simple. If it comes in hot, market ain't gonna like that. And if it comes in cool, we might be all right.
We might be okay. All right. What do you think?
I mean, so here's how I kind of look at it, right?
Mhm.
So I would say this report is going to be based on September and August numbers.
Mm.
All right. So when I think about August and September numbers, gas was kind of in my area, it stayed flat.
Yeah.
Food, I don't really see a decrease in food, but
Okay.
I don't think it increased either. Um, it'll be interesting to see how like the travel and stuff like the that does. Um, looking at shelter,
Yeah.
they always say housing is a lagging. I don't usually rents start to go down in
Yeah.
August and September because of like the fall special. So
Yeah.
if that comes down, that might help.
Okay.
Yeah, for real. Like, because
Okay.
that's what's kind of been keeping it elevated with
Yes.
rents. So if rents come down,
And
then
some places it's even continuing increasing.
say that again.
In some places it's even continuing increasing.
That's what I thought. At least in my area, I was like, I ain't seen no rent go down. But apparently in other
Not in
places,
mine.
rent goes up. And here's the research I did when I was like
Okay.
really digging in on rents. It's the apartments and stuff like that where you're seeing the rents go down because they offering the specials. When you talk to like a landlord, like somebody who owns a
They're not
property,
they're not
they're
budging.
not lowering
They're
rents.
not
Like,
budging.
yeah. So when we talk about people lowering rents, it's like
Yeah.
the apartments and all of that type of stuff. It's not landlords. I know that for
Yeah.
sure. I've talked to plenty of landlords to know that they ain't. If you own your property, you would not lower rent. So,
They're not.
I mean, so personally, I mean, I'm gonna be honest with you. It doesn't matter what I think, right? Because at the end of the day, I'm gonna be
Market's
honest.
gonna do what the market's gonna
The
do.
market's gonna do what it wants to do, and ultimately, it's about what does Powell think. Like
Yes.
what is
Yes.
his thoughts about this report?
Yes.
I guess that's another like probability or outcome is depending on this report. How does it affect what Powell is to do come December? Now he
Mhm.
still gets one more report before his
Okay.
December meeting, but it can lay the groundwork, right? Because let's say this is under, right, a 7, and they like, okay, it's looking good now.
Yeah.
December is it might, okay, we might get another down one. Say we get another down one, and then
He might.
that game coming into December, you get 2 in a row under 7.
But now
Hmm.
from the last meeting, Powell was not budging. He was clear and precise.
No, I don't. I'm not saying he's gonna budge, but if you get 2 back-to-back under 8 CPIs,
Mm-hmm.
when December come, he's still gonna raise rates,
Yeah.
but he'll do. Like he said, we're gonna start looking at the totality. So
Mm-hmm.
at this point, they'll be at 4.5, pushing maybe 5. You do one more come 2023, you're almost at 5, and let's say it continues to trend down by the end of the year, we could be pushing in the 6s coming into the 5 handles for CPI. And if that does and he holds it higher for longer, you eventually get that crossover. So only time can tell, we'll see.
Time will tell us. Now, when
Mhm.
we're looking at India, right? Do you think we're looking at either a small rally or listen, Santa just gonna stay?
Um,
You know what's funny? Because last year you and I
mhm,
wasn't alive,
mhm,
and we were talking about Santa rally,
mhm, mhm.
and we haven't seen Santa rally since then, and it's been a year. So we really
Yeah,
actually had a bear market for a whole year.
that's the thing. Yeah, yeah. Um, it depends on tomorrow. Like,
Wow,
I would just keep it real. I
that's
think
not true.
um tomorrow probably will dictate that direction for the next couple weeks, or the next, probably the next couple weeks. Because okay, so here's the funny thing. A couple things is going to happen tomorrow and going into Friday. So really, just the end of this week is really going to kind of like put things into
It's a
perspective.
picture. Yeah.
Not only will we get CPI numbers tomorrow, I'm pretty sure the elections will like be finalized.
Yeah.
So it's like you still got like some key races out there. It don't look like it's going to be the red wave that a lot of people thought it was going to be. As I'm looking, it does look like the Republicans are probably going to get the House, but it's the Senate that's really, really close. So by Thursday, we'll get that outcome.
Okay.
And then, like I said, and then on Friday, we get consumer sentiment. That's another thing that's like actually key in the market keys on. And so when all that comes through, we'll just have to see like how we end the week. Personally, I'll just say this. This is for anybody who's watching this levels wise. If we break, the market goes under 3,700, that is where most institutions have their stop loss. So if we get under there, it's a wrap. We're going back to the lows. Like, just get ready. It's going back to the lows. Not good. If we can hold 3,700 and like bounce and get back above 3,800,
then we may see.
I think if we get back to 3,800, then it's possible we'll rally into the end of the year. And I mean, there's so many interesting dynamics at play right now, right? Because there's the history of after midterms, the market is always good. Right?
You usually rally, yeah.
Yeah, right. So like you have that dynamic, right? You also have seasonals in that the market usually does at the end of the year, right? So that's another thing that you have like, okay. So I feel like the way the market is, I feel like it's set up for a rally, like a squeeze, right?
Okay.
Like even though today we sold off,
it wasn't enough.
But we sold off 2%. Yeah. Though, right? Like that's a good sell-off right there. But when it happened, it was just like if I go short, I feel like this thing might rip on me. Exactly. And then you feel like if you buy, it might still keep dipping. It had
What's really what the market been doing.
Right. So that's why I felt like it was just really just let this week play out, because it has so many dynamics that volatility is probably gonna be all over the place. So, I mean, but to summarize all of that, at the end of the day, if we break 3,700, just know, guys, that is institutions stop loss level. So we get under that level, it's a wrap. We're going back to the lows. If we get back above 3,800, it's a lot of work we got to do.
Yeah, to push.
To keep going. But I would just say if we get above 3,800, I would say that like, here's what I would expect. If we hold 3,800, I would try to use the seasonality in the midterm to my advantage and not think so short term, but really position myself for, say, the next 6 to 12 months and be conservative, be like maybe like a 15 to 20% bounce from where we are. Okay. That'll kind of give you the levels to judge and rock out.
Okay. Now, KW said election and holidays are big gains. Yes, based on history, we know that, election and holidays are big gains. But my biggest thing is this market has been showing us that, listen, what used to be is not what's happening. We're not in the same. I mean, we'll run for like for 2 weeks and then boom, drop a whole, and SPY can drop a whole $20 in just on one day.
Yeah.
That's not the market that's not the market we used to be in. So I just say, yes, we are in seasonality where, yes, okay, we're looking at a run in seasonality in election, but we are in a different market. Now, that's fourth quarter. I'm more interested in first quarter than any other quarter, to be honest with you, because I think first quarter will really kind of, okay, yes, we are in a recession. Yes, this is where we'll probably start seeing the layoffs. Yes, because after the holidays, consumer spending kind of drops.
That's a good point. That's a good point.
And that's when people usually say, yo, I'm in a budget now. Yo, I'm not doing this now. No, I'm not doing any spending. So I'm more interested in first quarter, and I'm also interested in first quarter earnings. How do you see earnings look like for first quarter?
For what sector?
I would say especially consumers.
Huh?
I would say especially consumers.
Consumers? How would the first? So mind you, first quarter they're reporting fourth quarter numbers.
Mm-hmm.
So that's basically what's going on during the holidays. So I mean, I think a lot of them probably sandbags. So like honestly, um, I mean, I think people still out shopping. Like I think kids still gonna have a good Christmas. May not be as lavish as it has been, but I don't see a super big drawdown.
Okay. What about
Um,
tech?
huh?
What about tech?
Um. So like it does look like cloud and the chip space is kind of slowing down, but I asked myself 6 months from now, is it going to be better or will it be worse? I think it'll be better.
Really?
Yeah. I think
Okay.
supply chains will improve. Um, some of the like supply and demand with the chips and all that stuff that'll kind of work itself out. And then it's also uh, I don't know, but a lot of people might have missed this. But during one of Nvidia's earnings calls, they mentioned how automotive chips would eventually be like the biggest industry,
Mm,
like past computers,
okay.
past gaming. It was automotive. So you got to like with the chips, you got to know which ones to really big up on and know who's doing what with like another plug. If you could like,
Yeah.
there's a few chip spaces that like if they in the 5G or Internet of Things,
Mm-hmm.
it's another different segment that are not a lot of the chip players ain't there, but that's like going that's going to keep growing, especially 5G.
Definitely.
Um, so I mean, I think the big dogs they'll be fine, like your Apples, your Microsofts, and Amazon. They taking the hit right now, like it is what it is. But those are great businesses, so I think first quarter they'll be fine. It's just a matter of how is the macro in a better spot for them to improve and for people to pay up for for the stock.
Mm-hmm.
Um, and same thing goes for like some of the chips. They'll probably do okay the first quarter because typically you have your demand over the winter time. That's usually when they do
Mm-hmm.
good. So I mean, yeah, that's kind of how I'm looking at tech right now.
No.
Now, go ahead.
Mm-hmm. I
Go
was
ahead.
going to say, are we actually when we're looking at Apple, which I always call Apple the mother of the stock market, right? Or the godfather of the stock market. When we're looking at Apple, when we look at where Apple is at, if we're seeing where Apple is going, I mean,
Boy.
where is the rest of the market going with Apple?
Okay, so check this out. So peep how Apple down, and I'm looking at my chart. Apple down
Mhm.
12% this month.
Yes, sir.
However, the market only down 3%. So that
Okay.
tells you other areas are holding the market up. Other areas is working right now.
Okay.
So if I look, let me see. I think I kind of already know off top, but like energy,
Mm-hmm.
energy going crazy. It was up 24%. You know what I'm saying? Last month that held the market up. You got, believe it or not, the banks did pretty good last month. They held up the market pretty
Well,
good.
that's because of the interest rate. As long as the interest rate are rising, the banks are going to do well.
Healthcare did good too, though.
Yeah.
They did good.
I think that's their season too, with seasonality, healthcare, banks,
Um,
elections.
the industrial sector did really good. So
Hmm.
like LMT and Deere, all of them. Um,
Golden Sachs did really good.
yeah, yeah, yeah. And
Hmm.
so that right there is what's
probably
holding the
holding
market together. That's what's holding the market. Just them sectors, right? Energy, healthcare, industrials,
banks.
and banks,
Mhm.
right? That's where it's at right now. Them the ones that's doing the best. So like that's why it's like you can't just write the market off until the end of the year.
That's
You
true.
just have to adjust and really find what's working.
Okay, with this, one of I had over like 270 questions
Mm.
last quarter, just going into fourth quarter, and a lot of the questions that people are really wanting to know. Oh, okay, like I believe in the idea that like we are in a market of stocks. We're not in a market, and there's nothing wrong with you day trading. I mean, scalper. It is a scalper in a day trader market, but
I would beg to differ. It's an everybody market. Do not say that. Do not say that. I hate when people say that. This is not no day trader
it's not
scalper.
let's be
This is a every
realistic. Okay,
listen.
okay. So
The
okay,
stock market is for
let's talk about
everybody.
let's talk about the leaps market. Okay, the individuals that are in leaps. Would you say we are in a market of leaps since we do not really
Listen,
know the stage of
yes. I would say if you find the right stock and it's at the
Mhm.
right price, yes, you could get leaps. You know what I'm saying? Like you just got to do it the right way. You have to have the right strategy. Like at the end of the day, I'm gonna tell you right now.
Yeah.
Anybody, if you could buy a leap on Amazon right now,
Oh, yeah.
2025, and
You sure can.
just
And
all you gotta
Google.
do is buy it. And I would say buy it in the
Right.
month. So buy you what
Yeah.
Amazon is at 80. It was like $85 a day. You could buy
Yeah.
$90 2025.
You sure
I'm
can.
sorry,
And
that's
even
good money.
Google, they'll say, even Google, you seen Google? Whew.
I mean,
Yes,
but that's my
that's
point
true.
though. So
You're
like
right.
that's why I'm
You're
like,
right.
it just
It
depends
depends on what is
on
your goal. What are
right.
you
It depends
doing?
on the style. It depends on how you do it. I'm not telling you to go out here and buy a Amazon 200. No, I'm telling you something that's like that's like okay.
Mhm.
This is I'm gonna get down. We're gonna really break some game down real quick. If I
Love it.
wanted to buy
Yes.
100 shares of Amazon right now,
Yeah.
it will cost me $8,600, right? Because they're $86 a share,
Mhm.
and I want to buy 100 shares. It cost me $86, right? I can't. I'll look up the price right now, but I could go buy.
I'm gonna go in here with you.
I could go buy 2025 Amazon $90 call. 2025 a 90 call, and it's gonna cost me basically $2,300.
2025.
Yeah, 20. So basically $2,200.
Yeah,
You know,
about $2,000, y'all.
basically $2,300,
Okay.
and that would give me the right to
You
get 100
exercising in that.
shares
You
at
exercising in that.
$90, and I can exercise it in 2025, right? So basically, I could cut the cost
Yeah.
to acquire. So if I want to minimize my risk and say, okay, I do want to get these 100 shares, but I want to wait and see what happens. I can
Mhm.
buy this contract right now, pay $2,000. I have it till 2025. So if Amazon run back up to say 150 by 2024,
That's true. You
I can
good.
I can exercise it
And
or
you
I can sell it.
That's
Either
true.
way.
That's true. He would be actually selling Amazon. You right. You right.
Because that's my thing. Like if Amazon
You
goes
right.
to 150 by 2024 and I'm sitting on a 2025 $90,
You right. You
I can
got what?
exercise
Time
that.
is in your hand. Time is in your
Or I
hand.
can sell it. Like, you know what I'm saying? Either way, I'm good. And on top of that, what I want people to pick up on that is I save myself $7,000.
Exactly. Up front.
Or no, I'm sorry, maybe it was more like $6,000 because to get 100 shares, it'd be like 8,600, but the contract is 2,300. So that's basically 6,300 bucks.
No, 100 shares would cost you 8,600.
Right. About 8,700. So minus the 22, that's
22.
what
Yeah, that's about 60.
6,500.
Yeah,
Right. So boom,
correct.
I saved myself $6,500,
Let's
and
go.
You know what
Nah,
I'm saying?
and realistically, you can actually do that with all of the big dogs. And where can you go wrong if you do that with the big dogs? And I'm talking about if
Well,
you did that with
again, it
Amazon, Google.
depends. Depends. Listen, I'm gonna give it to the whoever's watching this. I'm gonna give it to, because right now I would say like Apple.
Yeah, Apple's
You
still
might want to wait
expensive.
on it. You might want
Apple's
to
still
wait.
expensive. Yeah,
You might want to wait on it. Like you might want to wait on it. I would say Apple. You might want to wait on it.
but if we're looking at Google,
Let me see.
even Tesla's starting to look juicy. Listen,
Google's there. Google's there.
yeah,
Google's there. Google's there.
Google looks good.
Yeah, Google's there. I mean, it's under 90. Yeah, it's there.
Yeah,
You can, yeah. Yeah. I mean,
can't go wrong.
I mean, but again, same situation, right? So
Yeah.
if I really want to, and this is how I do, and for people who like you said, the leap mindset, this is kind of how like you should really look at leaps is be like, all right, if I want to build my portfolio,
Mm-hmm.
right? A lot of people want to build portfolios. So, you want to have 500, 1,000 shares. Well, what's a good way to like acquire that? You can either go out and buy them one share at a time, or you could
Exercise.
do like contracts and
Yeah.
like exercise it, right? So, like say like Google, right? So Google's, if you wanted to buy 100 shares, or say you wanted to make it a big portion of your portfolio,
Mm-hmm.
um, you know, you want to get 100 shares of Google, again, $87. That's going to be $8,700, right?
Yeah.
Well, you can get a 2025, you can get an $85 call. That's basically in the money, right? It gives you the right to acquire the shares at $85.
You can't really go wrong on that.
And the contract last price was $24.25. So basically will cost you $2,500. Again, you're saving almost $6,000,
Yep.
right?
And you're about to
And
make a
right. And if you hold this and it does what it's supposed to do,
the return.
right, the return gonna be good. But it's not. But what I also want people to realize though is
Mhm.
this is how you really like kill it.
Okay.
So let's use the Google for example.
Okay.
You want to buy 100 shares. It's gonna cost you $8,700. Well, if you wanted to buy one of them contracts, the 85, it's gonna cost you 25, right?
Mm-hmm.
So technically, you can get 3 of those contracts for if you were to go out and buy 100 shares, right?
Mm-hmm.
So you buy the 3 contracts, right? So now this gives you the right to have 300 shares, right? Because remember, each contract is 100
It's
shares.
100 shares.
All right. So boom, you hold it, and Google take off. It do what it's supposed to do. We get into 2024.
3 years.
Google's back at 130 or whatever.
Mm-hmm.
You can sell 2 of the contracts and then exercise one and use the profits to help, cover any cost that you need. And then you got 100 shares of Google
Which
at
you can actually
$85, right? At $85, which is the 8,500, which you originally had put in to the total trade, and then you're gonna be sitting on a bunch of profit from the 2 contracts that done did the damn thing. You feel me? So,
yeah.
like,
And with those 200 shares too, you can actually play with those as well too.
yeah.
Yeah.
Sure.
Listen, you can't say you didn't get any gem.
Yeah. So again, so when people say like it's a whatever, like you can swing trade in this market. You definitely can scalp in this
It's
market.
all market.
The biggest thing, and this is what I try to teach people and tell people, is that what makes traders great is not their strategy, is their discipline, their patience, and their execution. Because there's a bunch of million effing strategies out here that everybody teaches. It's just which one clicks for you, which one works for you, and which one helps you make money. That's
That's
how
what's important at the end of the day.
you know what I'm saying? Like at the end of the day, that's what it's really about. So that's why I don't never down nobody's strategy, nobody's style. Because at the end of the day, we all can make money. At the end
And
of the
if
day,
you're making money, if your strategy is making money, it's making you money.
right. And here's the crazy thing is, even though everybody has their own style and strategy, ain't none of us 100% at the same time.
Yeah.
So like,
Can we please find one person? That's true. That's true. Yes,
Like,
KW.
ain't
Risk management
nobody
is a growth.
100%.
None.
Everybody
None.
takes
None.
a
None.
risk.
Nobody.
So,
I
like,
don't care how
that
great
right
you
there
are.
in itself tells you no strategy is perfect and no person is perfect. So, like,
Yep.
if
I agree.
anything, just learn from each other, help each other. If you share with each other, and at the end of the day, you just got to be and I think somebody else seen in the comment risk management. You have to know your risk management. If you once you do that, you good.
That's so true. That is so true. Is there any tax associated with exercising a contract? As long you actually stay in that contract longer than a year, then it's still considered that's a long-term investment. Now, if you get out of it sooner, then yes.
Yep.
King. I answer the question for you.
Yeah.
Okay, so what are you looking at? We're about to hit 2022.
Yeah.
today.
So I ain't gonna hold you. I'm gonna tell you. So I've been
Okay.
refocused. So I've just been accumulating Amazon. That's the one I picked.
Okay.
So I just been acquiring. So I got a little bit more today at 86. So I'm layering this. So I got a nice layering at this 90, but I'm like, all right, man, I need y'all like y'all like really pushing me now. But no,
Amazon and Google do look a little sexy.
Yeah, I mean, this is how I'm looking at it, right? We young, so this is giving us a really good reset. So I'm like, okay, if I had to pick one company that I'm gonna build my base in for like the long term, and we getting these reset prices, I just went through them all, and I just feel like Amazon, you know what I mean? It's like they got tech, they got the food, they got logistics, and yeah, we going through this BS right now, but yo, my daughter and them still gonna be talking about Amazon. They're not going nowhere, right? Like,
your baby is gonna be talking about Amazon. Yes, like, that's true.
This was like, you know what? I just gotta go hard on Amazon. So I just been going hard on Amazon. So I'm just, at this point,
that's your number one pick.
It was my number one last year too, but it let me down.
I know. It's funny because
but this year I'm going with it again. Off the strength that I know that it's possible downside to, like, it's crazy to say this, but when I be looking at it, I'm like, yo, I really $75. Like, really? Yeah. When it gets there, or if it gets there, I will definitely be buying a lot more. But like, if it breaks 75, I ain't going for it. I will start to get a little concerned because I'm gonna be like, well, goddamn, like how much
lower can you get?
You're right. I'm like, oof, we need to get some type of balance here. I mean, I'm like, dang, the business is not this bad.
Listen, I actually thought you were going to wait for Apple to hit 100. I thought you were. I thought you were gonna. I didn't thought. I know even last year when I watched our last video, Amazon was your babe. You chose Amazon, but I thought you were gonna choose Apple.
Okay. I mean, outside. So I like Amazon. I mean, of course. Look, anybody watching this, I know tech ain't in favor right now, but that's number one. Outside of that, though, some others that I'm watching. I mean, y'all know Goldman Sachs is boo.
Yeah, always.
It's been popping. It just need to pull back a little bit. That thing took off.
A little bit? It need to pull back. It took off.
It did. It gave you a nice entry at 288 back to 362. So I like that. And another one that's a low key that I really rock with that just is hard to really time, but it's a good stock is Lockheed Martin.
Really?
Yeah, the defense contractor. If you look at a long-term chart, it's a slow mover, but when it get at go, it go, but then it'd be stagnant for like a couple months. It just stay there
forever. Oh,
it just basically stay there and then till the next move up. So, but I'm looking at that.
What about Meta? Good God, Meta.
Okay, so I got a homeboy that worked for Meta, and they seem convinced that some type of legislation is coming down the pipeline that gonna ban TikTok. So if TikTok get banned,
that's gonna be really hurtful.
hello Meta, hello Instagram, we back, we back. Everybody gotta come back.
Exactly. That's true.
Come back. So if that
I
happens,
do hope they ban TikTok. I'm sorry. I do hope they ban TikTok. On a personal level, y'all.
You said what?
I do hope they ban TikTok.
You say you hope they don't?
I hope they do.
Oh, you hope they do. Oh.
Yeah.
I don't, I'm not on it, never, I don't know. So, but yeah, if that happens, maybe. Another thing that, my boy told me was that like number one priority is definitely the metaverse. Like they really are like
pushing it.
Yeah. And so investors don't really, he got to prove it. The Oculus glasses flop. You can't be charging $1,500 for them things.
Sure.
So like it looks bad. Like I'm looking at the chart, it look bad. It look bad.
Now, last but least, Tesla.
Oh, Tesla. Oh, Tesla at 177, man.
Can we hit 155 next, please?
Man, I definitely have that price too, 155. Man. Okay, so here's the
Mm-hmm.
Again, it's one of those questions of we're at the point of how far is it going to fall, right? Because technically, if you look at it, Tesla is down 50% year to date. It's down 49%. I mean, that's a good discount.
It is.
It's a good discount. You know what I mean? So, but could it drop another 10, 20%?
Mm-hmm.
Most certainly, the way how this chart looking. Most certainly. Yeah. I would say the way how I'm looking at it right now, though, it looks like the next major area of support isn't until like 166.
Mm-hmm.
And then if we slide through 166, I will look for like 129.35.
Faces you be making.
I know people would be like, "Oh my god!" But like, and here's the thing, though, and I'm saying that as just like, I'm gonna give it a buck. Like, I'm pretty certain that eventually Tesla's gonna see 166 as well as 129. Like, it's gonna happen.
That's how I feel about Apple too. Eventually, Apple will see 122. Eventually,
no, I'm gonna tell you, if you want some numbers on Apple, I'm gonna tell you the real number that Apple eventually will have to get to.
And remember what we said? That's when we need to sell something.
Right. So it's two numbers I see. First one is going to be 108.86. And then the next one that is just going to be the heartbreaker is 77.38. When that happened, it ain't going to last long. It's not going to last long. It ain't going to last long. But just like as I'm looking at it, like it very, very much so needs to. Apple has to come back to 77.38. I don't know when it's going to happen.
We don't. It
could be a year, 2 years from now.
Yeah.
But all I'm saying is like over time, there's going to be incremental things and events that happen.
That will bring
it's going. That ain't going, and people going to be like, "Damn."
It's okay. We told y'all. Realistically, between Apple, Tesla, it's time. We're just waiting for time for things to take place.
This is what I want people to understand is that the reason why like some of these stocks can come back to some of these prices is because we went on like a 13-year bull run, right? So I really need everybody like put that in perspective. A lot of people just got into the market around 2020 and whatnot.
Mm-hmm.
Before 2020, like from 09 to 2020, nothing but a bull market.
Mm-hmm.
right?
Mhm.
Nothing but a bull market, nothing but low rates, right?
Yep.
Nothing but quantitative easing. Anytime something happened,
Yep.
the Fed was there to step in with quantitative easing. Well, now we're about to go into a decade where all from 2009 up until the pandemic, which is 2021, we had nothing but low rates and quantitative easing. We're now about to go into a decade,
Yep.
maybe probably, I won't say a decade, but at least a couple years
Yep.
where we're going to have restrictive policy. We're going to have quantity. We're going to basically have the reverse
The
of
opposite.
everything we had past 13 years. We're going to have
Pretty
the
much.
reverse of that. Like, I think like that needs to
Economics 101. Yep.
they got to like get set in people's mind. We're about to get the reverse. They're about to be
Yes.
taking money out of the system.
Yep.
You know what I'm saying? Like they're going to be tightening. So
Titan stuff.
when things happen in the market, like they're not going to be there to save us. So it's just
Reality check.
it could be it could be.
Let's just make sure we're on the right side.
Yeah, I mean, but
Yeah.
here's what I would say though. Once again, to put it into perspective in the context, it sounds bad, but eventually we will get through.
Of course.
And like things will be good, and these great companies they will recover. And so for people who are like my age, or I'm 30, I'll be 35. So 35 and younger.
I'm older than you. Way older than you.
This is like this is your accumulation phase.
Yeah.
So you should really look at it as like, yo, I got the next 3 to
30
4
years.
I got the next, say, 3 to 4 years to not only save, but is pump as much money as I can into this machine. So when 30 years hit, like all that money I put in and during these bad times, like that's the reason why I can go do whatever I want to do when I'm 50, 60 years old. Like and it's hard to think that way, you know what I'm saying, because people want to retire now and stuff, but you just
I do. I mean,
you really just gotta keep things in the perspective, man. Because here's my question, right? Even if you retire right now, what you gonna do?
Let me see. Sleep. Well, realistically, I don't believe in retirement. I believe in the idea of just doing the things that makes you happy. Because even when, if you are doing what makes you happy, what is retirement, right?
Right.
So
exactly. That's my whole right. And
yeah,
so that's
I don't
kind of like
believe
my
in
point, which is
retirement.
like, you know what I'm saying? Like me and my wife have gotten to a point where, like, you know what I'm saying, we're basically FI, right? We like debt free and stuff. So, the way that I trade, like I don't really have to take many trades, right? You know what I mean? Because like, the bills and stuff is paid. So like for me, like my freedom is like like you said, I can kind of do what I want to do, but I'd be like, I kind of be bored. Like I'm kind of think about picking up.
You're gonna be trading. You're gonna be trading and lose. You're gonna be trading. You're gonna be trading at 55. That's gonna be your retirement.
But see that, and so see, that's my point, right? Like for people who say like, "Oh, I want to walk away," or "I want to retire." Once you learn the skill set of trading, you learn that for life. Like I could be 60 years old and still be trading. You know what I mean? Like I don't have to ever stop. I can always watch the stock market. I can always place a trade.
That is so true.
Till the day I die, I can always be a trader. So like, what am I in a rush for? And that's another that I always be trying to tell people. Like, what am I in a rush for?
I think the rush for people is the freedom, is the idea that it is an idea. Okay. The idea that you choose though to be a trader for the rest of your life. I think
so let me and I'm gonna jump in, but let's say that all right, so you said the freedom, right?
Yeah.
But there's some like applicable things that people could do to where they could truly walk away and trade and be good, right? If you can become debt free.
Number one, you have no idea how many times I push it.
Become debt free, right? That's number one. Number two,
that's the biggest freedom.
I would say save up at least a 6-month emergency fund. So do your living expenses, get you a 6-month emergency fund, right? Actually, if you're going to be a trader and like quit your job, have a 1-year joint. So have a whole year worth of have a 1-year joint, right? And then what you want to do is with like your trading account, with your process or whatever you do, figure out, okay, how much do I need to make a month, right, to cover my expenses, right, for a month.
Pretty much.
Now here's the cool part, right? If you debt free and you live frugal, depending on where you live, it shouldn't be a lot to maintain your lifestyle, right? Like, bro, I got a kid in daycare. We have a mortgage, and like me and my wife, we maintain pretty good, like our lifestyle. So can't nobody give me no excuses. So like, yeah, it's like, so if you ain't got no
Amen.
kids and nothing like that, you should be able. You should have a low.
I'm in
You
agreement.
should have a low cost, like your
Cost
overhead
of
should
living.
be low, right?
Correct. Correct.
So therefore, what you could then do is, now that you have like the year, you know what I'm saying, you got your you know what your monthly expenses is. Now most people that we know that trade, depending on how they trade, um let's just say your expenses are like 5,000 a month, right?
Mm-hmm.
Let's say with your system that you know what I'm saying, you can average 100% on a trade. This is optional,
Okay.
so you might be able to get 100%, right? Well, what you do is your first trade for the month, you go ahead, and again, because you have everything in line, you should be able to risk $5,000 per trade.
Okay.
Now, let's say you put up the 5,000, you get the 100% on the trade. As soon as you do that, your monthly expenses are now paid, right?
Yep.
You paid yourself for the month. Now, what you can do is the second trade after that, that's for you, right? But you still follow your system. So then if you hit again, 2 trades a month, boom, now you got 5 that you can go back into your pocket. And then now here's the crazy part is, from there, now you just building, because now you have 10,000 going into that next month. But you know, you got to account for losses. So you need to make sure you have a stop loss system in place, stuff like that. But as long as you stay disciplined and you just continue to kind of like bankroll like that, you'll get to the point where you may not even have to trade, because you've like off of a trade you've hit 3 months of expenses, right? You know what I mean? Like, so what I would tell people is kind of like, that's one of the things that I try to do is like, my risk management is, okay, I'm willing to risk a certain amount of money. And typically, because I'm a swing trader, I know, okay, if I need to give myself at least 3 to, most of the time my trades should work within 3 to 4 months. As long as I'm good and I hold for them 3 to 4 months, like I should make about 3 to 4 months of what our monthly expenses is. And then again, I don't got to trade for a quarter, right? I don't even got to trade for a quarter. I could just be like,
I do that in my quarterly account.
Yeah, see, but you know, a lot, but then, you know, people like to just trade because of the allure and all of that stuff like that. But for me, when you doing it because you just want to maintain or whatever, you just chilling, like the whole want to be retired, like, you know what I'm saying?
What are you gonna do? You got to save for taxes.
Because like that's the crazy thing is, like, me and my wife talking about that. It's like, yo, sometimes I was like, yo, I gotta really save for 3 months. You know what I'm saying? And wait for this paycheck to clear.
That's actually good.
But like, that's how you know what I'm saying. So it's like,
yes, okay. That's that. I actually like that game plan. I use that game plan in my quarterly account, but and you know what's funny? My quarterly account will do great, but my day trading account, I guess I play too much in that account. It's like your quarterly account, you respect it because that takes care of stuff. So you respect
So see now you just was like, yo, it's, you mentioned earlier as a day traders or scalpers market, right? But yeah, you just admitted that your day trade account is but your quarterly one is better. So really, what kind of market is it?
Okay, you got me. It's true.
So like, you know what I'm saying? Like,
but when we really talk about account, and I'm not just talking about like a bulkage account, like you should literally, you guys should really use stop. Stop is really savings, savings, tax, operation, and profit. If you use stop, you'll never have a tax problem. Because realistically, if you respect the fact that 2% of your income is every week is going, or 1%, whatever the percent you choose to go to that account, it goes to. I never at the end of the year have a tax issue. Why? Because there's actually an account for it. And if you use stop, you should be okay. Don't forget, stop is savings, tax, profit, and operation. If you use those 5, literally under your operation account, 2% is going to tax, 2% is going to saving, 2% is going to profit. However, and with Stop, you will have a saving account. You create inside of your operation, you have a saving, you have a tax account. And at the end of the year, literally, you'll end up with money in your tax account after you pay your tax bill if you follow Stop. All right. So taxes is not really, I always tell people, go make money, then worry about taxes. Rich people don't worry about taxes.
Right. You gotta make the money first.
You gotta make the money first. So focus on making this money. Then yes, the Stop will work for you. But listen, it's about to hit 10 o'clock. Zay, this was awesome. Like you always give out good gems. Anyway, I was like, listen, I need to bring Zay in here because this is our 1 year anniversary. Last year he came in here, and I can't believe last year you were like, listen, Amazon is it, Abby. And we both liked Amazon.
Hey, look, I did. I told you, listen, it let me down. And I'm not on there. And look at that. 1 year later, I came right back around to it. Right back around to it.
And you know what's funny, Zay? Your perspective, your thesis, they don't change. And that's good. The way you trade too, it stays the same. And consistency is everything. So
yeah, but that's why, it's like,
yeah,
you gotta know what works for you. You know what I mean? And for me, I just that everyday thing.
Yeah.
I like looking at it. It's fun. But I can't when you gotta press the buttons and all that, I'd rather like sit back and just
I feel it. Watch it do its own thing. I know a trader that's really similar to you. I'm literally gonna make him watch it, be like, see, I told you he trades just like you. All right, that's awesome. Listen, greet your wife for me, baby girl. And listen, tell your baby girl my birthday and her birthday is so close. Congratulations again. Thank you so much for joining us tonight. Guys, thank you also for showing up. Don't forget to share, like, and subscribe. I'll see you guys on Monday. Zay, have a wonderful rest of your night.
Thank you, everybody.
See you next year.
Yes.
Bye. Okay, we thank you again, Zay.
Okay, are we off? We off air?
We off.
Right, yeah, appreciate it. No, that was fun. That was fun. I'm glad you finally moved over to YouTube. Go ahead, get yourself monetized and all that. I feel you.
I left Instagram, but yeah, I like YouTube. My social media manager was like, "Can we please leave Instagram?" I'm like, "I love it." So she's like, "No, we're going to